it's hard when you disagreeing. When God's in the center, he's refereeing. Talk about triggers and traumas while having date nights at the gym and the sauna. To business meetings discussing the health of the wealth to the season of commas.
New beginning, prosperity, abundance, family will continue to walk by faith, not by sight. We know that God will supply.
What's up, good people? Welcome back to another episode of Marriage, Family, and Business.
Yep.
I'm Katina.
I'm Vernon.
And we're the Danridges.
Yes, we are the Danridges.
I had to add that in there, okay? We're the Danridges, and in this week's episode, we're going to do a deep dive into the different insurance policies that we were talking about. But this time, we're going to be a bit more creative with it. We're going to use stories and real life scenarios. I know you're excited about this episode, baby.
Yes, I am. I'm excited to tell some stories of some people that we run into, and some people that we haven't run into yet. But there's a scenario out there just so people can have an understanding of what could happen.
All right, so let's just dive right into it. We're going to get straight into the story. It's not one of those once upon a time and a long time ago. This isn't that. This is happening every day. So the first thing we're going to talk about is the joint survivor policy.
Okay.
All right, and this is a couple's promise. So pretty much we're going to talk about Dave and Lisa. All right, Dave and Lisa have been married about 25 years. They have kids. Dave has a good job. He does have a policy through his job. But his wife is part-time because she's part-time and she, works with the kids. So what they decide to do is to get this joint survivor policy with one another. So what the joint survivor policy is pretty much the death benefit goes to the last survivor of the spouses. So should I use us as an example?
Well, that's fine.
All right, so it's pretty much a policy, whereas if Vernon were to pass, then it's left to me, or if I were to pass, then it's left to him. And what also, too, is the living benefits that are a part of that policy.
Yep. So it's like covering both of the spouses and making sure they're all covered under one policy instead of them having two separate policies.
Exactly. And the one great benefit of that is you can get, say, one spouse doesn't qualify for coverage, but the other one does. Mm-hmm. You still can get that type of policy. I recommend if you're having a situation where it'll be like too much because of any pre-existing condition one spouse may have, to get this type of policy so that you guys will still be covered off that one policy.
Yeah.
That make sense?
Yeah, it makes a whole bunch of sense. So both what you said, David and Lisa?
David and Lisa, yeah.
David and Lisa has this policy, and a few years after they bought the policy, unfortunately, Lisa finds out she has cancer. Too many times stuff like this happens, but this is just a precaution to show you how they have help. So they have two options. Because they have this policy, the number one option is, because Lisa is part-time, David can then take the living benefit, depending on if it's terminal, chronic, or critical. They will be able to take a living benefit from that death benefit, and they'll be able to use that policy while they're still living. So while Lisa's still living, say, something was happening with the bills, they will be able to pull that money and actually pay bills. Now, let's go on the worst side. The worst side is Lisa passes. If Lisa passes, then David gets the full death benefit, tax-free, nothing, no problems with, getting that money, and he'll be able to not only take care of the kids, he'll be able to take care of the bills. He might even be able to take off work and take, something like that happening. You don't want to be in a situation where you're as a spouse that has worked and been the person that, had to work when you was going to school. I know how hard that can be, just to be the only spouse that is kind of like the financial force at that moment, because that happens every once in a while. So, what David would be able to do is he'll be able to have the money that he needs to recover, because it's definitely something that happened traumatic that he has to recover from.
It's about making sure that no matter what happens, both spouses are protected instead of just one spouse.
Yeah.
So in some cases, people will be like, "Oh, well, the only person you were needed for is the breadwinner," but
Yep.
it's for both ends because even if she was part time and it wasn't a lot of money coming in, she is providing care for the children.
Yeah, she is.
So it's that the policy is good for both of them, regardless of the financial force or whatever is taking place. So it's important for couples to have that with kids or even without kids, and also if you own a home, it's good to have that along with the mortgage protection policy that we spoke about in our other episode.
Yeah, I mean that story just shows their backup plan. When you get married, this is a contract for life. I'm happy to have a life partner here that I'm even talking to you with, and we learned this together. But this is the backup plan to protect your family's legacy, making sure that you have a hedge against any type of loss, whether it be something that you wanted to happen or something that you didn't. So, that's just, and when I say wanted to happen, I'm talking about, we have people that get divorced.
Yeah.
They have a contract now. So, I spoke to a minister that I know that he got a divorce from his wife. His wife actually stepped out on him, and he still has that life insurance policy. So if she passes before him, that money comes to him and his kids because he has custody of the kids.
Right. That makes sense.
So even if they're not married anymore, he still has a policy that he owns that that doesn't totally go out into the we hate divorce, but at the end of the day,
I mean, this policy works too. Well, not this policy, but there are policies of, I know women that have insurance policies on like the father of their child, or fathers having the same policy on the mother of their child.
Insurable interest.
Insurable interest. The insurable interest is they are the a mother or father of the child. That's the insurable interest. As long as there's some type of insurable interest, you can have a life insurance policy on that person.
Yep.
All right. So now we're gonna switch gears. We're gonna go to.
That was a good one.
Yeah, we're gonna go to.
I like that one. I'm gonna give you a clap on that
Do
one.
you like that?
I'll give you the. All I have is this one.
I've been working on my Migos ad libs. So the next one is the $1 Million Baby Plan. I love this $1 Million Baby Plan because one, we have $1 Million Baby.
Yes, we do.
So it's pretty much a gift for the future. So
and we've made many $1 Million babies.
we have, and we
friends and family
Yes.
who actually listen to what we were able to show them. Yeah, I love those plans because I love to be able to tell a person when your child is this age, this is how much the account will be worth if you follow the plan.
Absolutely. So we're gonna go into this story. So we're gonna use an example of Rebecca and James.
Mm-hmm.
All right. And Rebecca and James have their first baby, and they named baby Jacob.
Baby
all right.
Jacob.
They had Jacob, and they're very serious about Jacob's future.
Mm-hmm.
They're so serious about his future that at 3 weeks old, they get a life insurance policy for Jacob.
18 days. Most carriers will take them at 18 days. The particular one that we actually, use for this particular type of policy, we call it the $1 Million Baby Plan. So we have people who take tax refund money. So, back in the day, people just take that money and spend it on toys or, this and that. But they would take that money. Let's take it, for instance, $5,000. So they put $5,000 in Jacob's account every year until he turns the year of 18. He graduated high school. Jacob doesn't know if he's going to go to college, if he's going to start a business, or he's going to become an investor, real estate investor, do something, entrepreneurial. So what they're able to do is by the time Jacob is 18, he'll have more than $100,000 in his account. Not only will he have $100,000, but he will also have the living benefits as a hedge if something were to go wrong. We know kids get issues with, prom accidents. All kind of crazy traumatic things can happen in the world, but he has this hedge of protection that he's building up with a asset of cash that is a bank. So by that time, he'll have 6 digits at 18. Most parents do this until their child is married, but Jacob at age 18 will have $100 and something thousand in an account that he can pull out and do whatever he wants to do with it tax free.
And here's the important thing, that from 3 weeks old, they put this $5,000 into his account every single year. Mm-hmm. So for 18 years, they did this. So understand that a lot of us, we talk about IULs, and there's people who want IULs with 30 and 20, 30, and 40 years old wanting an IUL and thinking about the accumulation that can occur when we're 65 and 70. Mm-hmm. Think about the accumulation that can occur when you're 3 weeks old when you got it.
And really, because that's the cheapest or the most cost effective that insurance will be at 18 days, right? 18 days old. So, as you looking at, that's the lowest amount that it will ever be is this child is 0
years old. And if we go into the crevices a bit, and some insurance carriers, they actually will be they'll be hesitant about covering any child with like any special needs or autism. Mm-hmm. So if you're able to get a policy the earlier before all of those things happen. And I know people are like, oh, my child has a policy through me. Man, that is a child rider. A child rider policy and a child having their own policy is not the same thing. Totally. It's not the same thing. A child rider means as long as you're living, they have a policy. So in the event that they pass and you're living, you'll receive that $5,000, $10,000, or $12,000 that it has. Mm-hmm. Okay, but in the event that you pass, that child is no longer covered.
Nope.
Let's understand that. Secondly, they have their own policy. He just explained it. Now, granted, this couple, Rebecca and James, they put in $5,000. But if you can't do $5,000, put in $1,000, put in $800, put in $700. At the end of the day, a birthday party at Chuck E. Cheese is about I'm serious. A birthday party is about $500.
Yep.
I remember $500, $600 for all these birthday parties, and I get it. These are memories that we're cherishing for these kids, but
they don't remember it.
Right. But you have like grandparents, aunts, and uncles that are giving things for Christmas, that are giving money. If you don't have the money, take the money that family members are giving you and put it in this type of thing, so that they can have this when they're 18 and 21 years old.
It's a protected asset.
It's protecting it. As we're all chasing the bag and getting to the bag and securing the bag, make sure we protect the bag. Don't leave the bag open.
Yes.
All right. So we got that covered. $1 Million Baby at 18 years old. Jacob was able to get this money. He can either use it to go to college to pay for some things, start a business, start a YouTube channel, because it's teens and Gen Z out here making a lot of money through social media and TikTok and YouTube. Right. All right. This next story is actually a real story, so I'm going to leave names out of it. But it's about a client of ours. She is about late 20s.
Early 30s.
Yeah, late 20s, early 30s. And her...
Not going to say her name.
Right, we're not going to say names. Her father... doesn't have life insurance. Either he didn't believe in it or he just didn't want it.
Well, I believe it was with his job, and I don't think he's working there anymore. So she took it out on herself to say, I'm going to take care of him.
Right. Now, this is the question to you guys, is say that's you and your parent, they lost the job and their life insurance was through their job. They lost the job. They no longer have it, and they're a baby boomer. She felt, and I'm asking you guys, do you feel this way? She felt it was her obligation to get a life insurance policy on her parent, because at the end of the day, it's her responsibility to take care of him after he passes, to take care of all of those funerals and all those expenses. And she said, I don't want to do a GoFundMe. I want to have something set up already.
The most mature thing I've ever heard from.
Exactly. She got her own policy and a policy for her parent.
Yes.
And I thought that was beautiful. Let's applaud. Let's applaud.
No,
let's applaud her.
Hopefully she sees this.
I know. Let's applaud her for that, because she didn't have to do that. And a lot of times it is nothing wrong with it, but we just depend on our parents having policies on us.
And we the adults now.
And we're the adults now. We're the uncles, but you're the uncle outside with the sandals on doing the grilling.
Yep.
We're the aunties out here doing the cooking and doing the slides. Like,
Thanksgiving.
we're those adults now, and it's our responsibility to make sure ourselves are covered, our kids are covered, and if our parent needs some type of coverage, get it done so that we don't have to do those fundraisers to try to pay for those expensive. I actually had a friend who had to do that her father wasn't insured, and she had to find money to get to pay to get his the burial expense and aspects. And for some people, you know, they feel like it's embarrassing to do that GoFundMe, and it's like it's a sad thing. Is because that individual didn't take care of those endeavors for you, so you had to do it.
I remember you know, like last year, we were talking and looking at Power, and we saw Tyreek do this experiment with his classmates in college where it was talking, you know, step up, you know, if your parents have life insurance, trust, or something set up that you were able to benefit from. And he ended up being in the front row because Ghost had gave him this big old trust package with life insurance and all these financial investments a part of it. That's considered privilege in this country because his dad took the time out to say, okay, this is how much money he will have if I pass. Now then, his time when he has his child, if we have his child after this last episode, but as if he has his child, then he should be able to take that same thing, even though it's drug money. I'm not gonna put, you know, it's drug money.
I mean, look, it was dirty money, but he did
the right thing with
things with it.
He did the right thing. Now we didn't, you know, like as an insurance agent, if a person came to me and I, like Ghost you didn't know what he was doing.
Right.
So
Ghost had the club.
But he did the right thing by his child by making sure that they were taken care of if something were to happen to him. Most amazing thing I ever seen, like to see that young black man in the front row.
Yeah. Yes, that was an amazing thing to see.
So that's the privilege. That's what privilege look like. It looks like a strategy. It looks like discipline.
Well, the privilege is really the parent taking care of their current endeavors and creating a future for their child. Mm-hmm. When we don't create our current wealth, because we talk about generational wealth, but before we even talk about generational wealth, let's talk about current wealth and
what we have,
and if we're not taking care of what we have, if we're not doing a proper stewardship over what we have, then how are we going to leave anything to our children at the end of the day? And for those individuals who are like, you know, I don't have kids, do I need to do this? I had a client. She got her policy and she was like, you know, I want to get a policy for my niece. Mm-hmm. You can do that. Now that's a rich auntie. That's a rich auntie that was like, you know, I want to get this policy for my niece because I don't have kids and I want to do this. I want to do this for them because I don't know if my brother is going to do it. Right. You know, or an uncle can do that. So grandparents, aunts, uncles, as long as there's some type of insurable interest. Now, for some insurance carriers, I think they allow a godparent. It depends. Some of them do, but if you want to take care of those endeavors, just make sure. Like I think I have another client where there's some adoption. They allow you to do it with adoption and stuff as well. So that concludes that last story with pretty much the child taking the policy out on the parent. Now we went over 3 stories. The first one, the parent, the couple having their joint survivor policy, and then we have the $1 million baby policy, and then lastly, the child taking the policy on the parent. So now we're going to do a call to action. So we cover all these incredible stories about building legacy. So if you guys have any questions, concerns, or you know you're interested in one of these policies to help your current wealth or your generational wealth, you can reach out to us. You can either put it in a comment, you can message us. Yeah, there are different ways that you can contact us. We got a whole lot of ways. Yeah. If you're seeing this on social media, you can DM one of us to help. But we want to help individuals because a lot of times people say they didn't do it because they didn't know.
Yeah. And then they wait until it's too late, you know, like when parent is like really, really sick or, you know, when they're really, really sick. And that's when they thinking about it. And that's not the time to think about it, man. You you should be thinking about this stuff as soon as you get a job. As soon as you get some type of income coming in, a portion of that income should be put aside for the future you, the future future family that you plan on having. Even if you don't plan on having a family, that particular policy helps with life benefits that, if something go wrong, you solid. But it takes the discipline, it takes the planning, preparing to make sure that you have that type of protection on the side on whatever your endeavors might be.
Exactly. As we chase the bag and as we secure the bag, let's protect the bag as well.
Yep.
Let's not leave it open.
Yep.
So again, if these stories resonated with you, of course, reach out to us if you're interested in creating this type of legacy for your family. All right, but we want to thank you guys for joining us today.
I'm gonna give y'all a hand clap. Thank you for coming.
Thank you for staying. If you actually watched the entire video, just put in the chat.
I watched it.
I watched it. If I see the comment, I watched it.
Matter of fact, one day I actually want to do like a gift card. Like if they saw it and they got all the way to the end, the first person that said I watched it,
we'll send a gift card.
We're going to send you something.
So we're not going to even say anything. It's just going to be there. So if you watch the whole thing and you comment, I watched it, first person, we got you. All right? And then tell a friend to watch it too after you do that. All right? But thank you for tuning in with us today and these stories of life insurance. And again, I'm Katina.
I'm Vernon.
We're the Dandridges. And thank you for tuning in to Marriage, Family, and Business.
All right.
Marriage gets hard when you disagree. When God's in the center, he's refereeing. Talk about triggers and traumas while having date nights at the gym and the sauna. To business meetings discussing the health of the wealth to the season of commerce.
New beginning, prosperity, abundance.
Hey there, I'm here to talk about something that might not be the most thrilling topic at your dinner table: health insurance. But hear me out, because understanding this could save you a ton of stress and money. So you're juggling work, family, friends. Life is hectic. And right in the middle of this whirlwind, you're supposed to understand health insurance plans? Seriously, who has the time? That's where Purely Flourishing comes in. Now imagine this. You have a team that not only helps you pick the right plan, but also walks you through what everything means. No more puzzling over terms like deductibles or co-pays. Sounds good, right? At Purely Flourishing, we don't just hand you a plan. We make sure you understand it. Why? Because we believe the more you know, the better you can protect what matters most. Picture this scenario. You're at the doctor's office and you actually know what your plan covers. No surprises, no heart-dropping moments when you see the bill. Just confidence because you've got the knowledge and the right coverage. And the best part? Our agents are real people who get that insurance isn't everyone's cup of tea. They're here to clear up the confusion, answer your questions, and they actually care about making sure your family is covered. It's kind of like having a super knowledgeable friend in the insurance world. So why not let us take some of that weight off your shoulders? With Purely Flourishing, it's not just about having insurance, it's about understanding it and making it work for you. Because when you truly understand your health insurance, you take control. You protect your health, your peace of mind, and yes, your wallet too. Let's make health insurance simple. Not just because it's necessary, but because you deserve to feel secure in your coverage without the headache. Reach out to us at www.purelyflourishing.com. Let's protect what matters together. Remember, it's not just insurance, it's your life, your health, and your peace of mind. And we're here to help every step of the way.